The adjustment in the time, notwithstanding, because I know originally it was supposed to have come up earlier than now. But thank God for the understanding that we need to adjust the calendar in line with our standard practice. So you are most welcome.
Thank you, sir.
You have the floor and wish you the best
Thank you, sir.
in the program.
Thank you, sir. Thank you, sir. All right. The Director General, Nigerian College of Accountancy, Jos, Nigeria. The Director of Studies, our formidable IT team, and distinguished students, ladies and gentlemen. Good morning. I count it a privilege as well as a great pleasure to take this session of certification course in digital accounting. If we have gone through what the Director of Studies have shared earlier on the WhatsApp group or WhatsApp platform, we realize that it is a package that has been put together to empower a graduate from the college to be able to fit into what is obtainable in the industry. The foundation has been laid by our qualified and highly experienced lecturers in the college. All I've just to do is to build on it. I'll go straight and hit the ground running. I want to say again, thank you, sir, to the DG for this great opportunity as well as privilege. It's something that has been on, and we have not had the story of a better yesterday. Like the path of the just that is shining brighter and brighter. We believe that this crop of students will even do more wonderfully when they get into the industry, considering the fact that we are in an era referred to as era of digital revolution. Some people refer to it as era of digital Darwinism. So that's where we are going digital today. Now to lay the foundation, as you can see on my screen, the very first course overview we are going to look at is overview of digital tools for accountants. Ladies and gentlemen, it is not a fallacy or overstatement to remind us that every professionals have their tools of working. They have their working tools. The medical doctors have their own working tools. The engineers have their own working tools. Carpenters have their working tools. So we're going to be looking at the tools in the hand of the modern or digital accountant to fit into the competition that we refer to as global. That is the foundation we're going to lay this morning before we now take the practical sessions. I want to be sure that our students, you have your laptops. This is not era to join with phone here because your hand, you put your fingers to work as well. So both accountants and non-accountants in today's digital age can benefit from a range of these digital tools, as well as streamline and enhance the financial management process. Accountants utilize a variety of these tools to optimize their workflow, whereas your own contemporaries, your own colleagues somewhere else who are not privileged to have this hands-on training may be struggling to get things done. You are far away ahead of them. I have one of the graduates from the Nigerian College of Accountancy, the college and the association doing wonderfully. That guy is in Canada. Every time we are in touch, this guy keeps thanking the college and also thank me. He said, Prof, thank you for these digital tools you have exposed me to while in Nigeria. This is what put food on my table and gave me advantage over other applicants here in Canada today. I think today that same guy is not only working with an organization in Canada, he has even gone into practice himself. Now, the digital tools for accountants include They're not limited to what we have seen on the screen. One, accounting software. Under this accounting software, we have various categories, various examples. We have the QuickBooks, we have the Zero, we have the Sage Accounting, we have the FreshBooks. You can see in my slide, I just limited it to 4. But we have a lot of them. We have what is called Busy Accounting. We have what is called Sun System Accounting. We have what is called MYOB Accounting, MYOB, Mind Your Own Business Accounting. There are a lot of them. And I keep asking the question. The question is, as a modern day or digital accountant, must I know all this accounting software? The answer is no. In our own consulting firm, we have what is called need assessment. Even after graduating from the college, if you go into practice and your clients call upon you that we want you to come and install for us an accounting system, you carry out what is called need assessment. What are your needs? What are your expectations in system life cycle? When you remember system life cycle, they talk about output first before talking of input. You look at the output design. How do you want your report to look like? Then you go back to the drawing board and sit down and begin to put together the relevant tools and the relevant software that will give your client the desired output. So when they ask you the question, must I know all the accounting software? It's as the need arises, the one that you need per time. You need to study it. But this morning also, and when we come to cloud accounting, we are going to see the most popular one. And I also advise accountants or accountants in the making, even if you don't know any accounting software, Microsoft Excel spreadsheet is a necessity for a modern day accountant who really want to fit in into the accounting that is being practiced globally. Now, number two, another tool in our hand as accountant, tax preparation and filing. And under this category, we have the TurboTax, user-friendly tool mainly used for individual tax filing. Then we have the Tax Pro Max. Of course, this is the one we use in our country, Nigeria. It offers tools for both individuals and businesses for tax preparation. Then we have the Drake Tax, comprehensive tax preparation software commonly used by professionals. The next category of tools in the hand of accountants to be relevant in the digital age, payroll management. And under this category, we have the ADP. The ADP offers comprehensive payroll services and human resources solutions. Then we have the Paychecks. This provides payroll, human resource, and benefits outsourcing services because sometimes necessity will necessitate that you outsource part of your services, especially where you don't have the required expertise to handle, or you don't want to do everything yourself because no nation is an island of itself. You may know it, but then you want to concentrate your energy to something better in time management. That is very important. So when you outsource your payroll, you can use what is called user-friendly payroll service with integrated benefits. Now we have expense management, and under this expense management category, we have the Expensify. See that name, Expensify. This is used for tracking expenses and receipts easily. Today, we go to organizations that are still doing manual accounting, paper and biro accounting. They are looking for one receipt, they can't find it. Somebody who have cornered or perpetrated fraud is hiding document. But when you use Expensify, of course, some of them are cloud-based. Even when the laptop used to post those transactions are stolen, you cannot go into the cloud to steal what is in the cloud. The information are ever there, except you go into the cloud also and delete. Even when you are deleting, they will still tell you those information you have deleted can still remain accessible for a period of 30 days or more. We have the Concur. This helps in managing expenses, travel, and invoices. Then the Receipt Bank automates the collection and data extraction of receipts and invoices. Another category of tool in our hands as accountant is invoicing and billing. And these two, one of them is called Zoho Invoice. This tool simplifies the invoicing process and allows customization. You want to customize your invoice, Zoho invoice. Yeah, we call it invoice. It's not paper. It's not physical invoice like this. These are software. These are templates we can use. Then we have the Wave. That's another accounting software. The name is actually called Wave Accounting. So when you hear Wave Accounting, it allows for free tool primarily used by small businesses for invoicing and accounting. Then we have Invoice Ninja. It's not the ninja we watch in film. Kanti has a lot of terminologies like that. This is an open source option for creating and sending invoices. See another tool in our hand, project management and collaboration. Of course, accountants are financial managers. When you come to management of resources of the organization, you also have tools you can use to help you take decision timely and efficiently. We have the first category called Slack for internal communication and collaboration. Then we have Microsoft Teams. I'm sure in the university, that's Anna University now, lecturers, professors, they use some of these tools by Microsoft. We have Microsoft Team and the rest. This offers extensive collaboration tools integrated with Microsoft 365. Then we have what is called Trello, useful for organizing tasks and projects. Then the next one, we have data analysis and reporting. Under data analysis and reporting, we have Microsoft Excel, still widely used for various data analysis and reporting tasks. And that is the first one we are going to focus on today. Then we have the Tableau, some other call it Tableau, a powerful tool for visualizing financial data. I was privileged to carry out an investigation for Nasarawa state government a couple of years ago. We investigated into the financial affairs of the company owned by the state government. I think the governor had a tip-off that a lot of manipulations have taken place in that company. So our firm is invited to come and carry out investigation. And after doing all the investigation, I was writing the report. It message came from the governor informing me that he doesn't want all this long theory. He wants it summarized. So we have managers at the top, or we have decision makers at the top who will not have time to be reading all this lengthy report. They want to see it in picture form, pictorial representation of the results, your findings. So in this, we have Tableau that can do that for us. Even your Excel, you can design Excel template to help you do that. And that was exactly what I did. I have a template that I use to do the report. And in that template, all I just need to do is to key in the data. As you key in the data from the findings, from our findings, from that investigation, this template plot the graph and even recommended, because in that graph or chart, you will see whether the company has actually done well or not, or they are doing well or not. And based on what I saw from that template, I wrote my recommendation that the performance very poor, money has been diverted. And is it a year or 2 years after, they have to shut down immediately. What they even did for was to sack the MD and the accountant there. Then they liquidated that company. They have liquidated it. Now we have again under that project management and collaboration, Trello, data analysis and reporting, Google Sheets. Google Sheets. I said earlier, all these are under Microsoft Team, Google Sheet, Google Team, being used in the university, Anna University, a cloud-based alternative to Excel with real-time collaboration features. Now, the way Google Sheet work, we are going to see the Microsoft Excel practically demonstrated. But when you now take it further, all right, I don't want to use the Excel on my laptop that come with the Microsoft Office. I want to go into the cloud so that peradventure my laptop is missing. Any other laptop I can access, I can still process and post my transaction. That is what Google Sheets, a cloud-based alternative to Excel. with real-time collaboration features. One important thing about this Google Sheet is that, of course, since it is online, since it is cloud-based, you have to have constant internet access. Number 8 category of digital tools for accountants is document management and storage. We have Dropbox, very common. We know that. We have Google Drive, offer cloud storage with easy access to Google Workspace apps. Then OneDrive, Microsoft Cloud Storage solution integrated with Microsoft 365. See another tools for accountants, customer relationship management, CRM. Salesforce is number one under that category. And Salesforce here is a widely adopted customer relationship management with extensive features. HubSpot offers a range of CRM tools and integrations. Zoho CRM, a CRM with extensive customization option. We have another category of tools, time tracking. And the first one under time tracking is Tog, simple time tracking tool with various integration. Harvest helps in tracking time and invoicing clients. Then we have the Clockify, a free time tracking tool. Remember, time is money. Accountant also manage time management. And we say humorously when I take some presentation, I say if time is measured in times of life, it means time wasted is life wasted. Procrastination, a thief of time. So, as an accountant who want to make judicious use of the time allotted for a particular task, you need these time tracking tools. Electronic signatures, we have first example there, DocuSign, widely used for signing documents electronically. I'm sure some of us have used this, where you even find yourself in an environment that you don't have printer, you cannot print, and you have to sign. DocuSign, the Elo Sign offers electronic signature solutions with various integrations. Adobe Sign integrated with other Adobe products for seamless workflow. Number 12, can you see the list is endless? The number 12 tool in our hands, cyber security. And under this category, we have the LastPass, a password manager to secure sensitive information. Norton provides comprehensive cybersecurity solutions. Cafe, known for its robust antivirus and security features. Audit tools is part of what we are going to practically demonstrate. In these audit tools, we have the ACL, that's Audit Command Language. That's the full meaning of that ACL, Audit Command Language. Now known as Galvanize, used for audit management and risk assessment. Then we have Caseware IDEA. I'm going to practically demonstrate this audit tool by God's grace. I think that one is coming up tomorrow. This facilitates easier audit preparation and reporting, particularly this idea. Do you remember from what we have been taught even in the college, that audit is all about you gathering all data, then carry out analysis about all the transaction in order for you to gather sufficient, reliable evidence that will enable you to form an opinion as to whether the financial statement represents a true and fair view. Where you now operate or you are auditing an organization with volumes of transaction, all the big data, volumes in terms of volume, in terms of varieties, and in terms of velocity. You need a software, you need a tool that will help you. And one thing about this Caseware IDEA also, IDEA is the acronym for what? Interactive Data Extraction and Analysis. So it's a data analysis software. We'll go deeper tomorrow when we come to IDEA application. That's electronic audit application. Then we have Teammate, an audit management tool that enhances audit workflows. Then spreadsheet software. Under this category, we have the Microsoft Excel. This is the one I emphasize that as an accountant, even if you don't know Sage 50, you don't know QuickBooks, you don't know Tally, you don't know busy accounting, you don't know MyOb accounting, it is advisable. This one is a necessity for modern day accountant. Then Google Sheets, cloud-based, mentioned this earlier. And the last two from this slide is blockchain and cryptocurrency. Ladies and gentlemen, later today, let me see our timetable. If you see the afternoon session, we have cloud accounting and blockchain technology applications. In blockchain technology, we are talking of set of distributed ledgers, immutable ledgers that is used in recording digital asset transactions. We are going to see that practically demonstrated. Under this blockchain and cryptocurrency, we have the Libra. This provides tax and accounting software specifically for blockchain and cryptocurrencies. Then we have the soft ledger, specializes in accounting for cryptocurrency transactions. Now, in conclusion, I advise here that when choosing a tool, consider the specific needs. I said that earlier, that we carry out what is called need assessment and workflow of the entity, including integration capabilities with existing system, scalability, security, and compliance requirements. Doing a trial or demo and seeking feedback from actual users will also be beneficial in making a selection. What we are saying here, what would be the choice of the software you eventually use? Do a demo presentation, then feedback from the people who are going to use it before you do the final implementation or installation of the particular software. Thank you for your attention. Straight, we go to the business for the day. That's just by way of foundation. If you look at your timetable, the very first module we're going to see this morning is electronic spreadsheet application. So I want to be sure you have the templates that has been shared on the platform. We expect that you download those templates and copy to your desktop, because we are going to go straight into the practical session. That's number one. Number two, I also want to believe that you have printed the questions. We have some case studies in that study manual shared with us. We have some case study. We'll go into those case studies so that our fingers will be put to work this morning as digital accountant. Again, before we take the practical session, theory is the basis for practice. I just employed, by God's grace, 3 graduates from a university in Nigeria in our consulting firm. Please listen to this. Very, very important. They are graduates. And what I usually do, even while I was fully on ground in Nigeria, every year, I get the list of those who are first class or second class upper from the Department of Accounting in my university, Nasarawa State University. I tell the students as they are leaving the school fresh, instead of going to sit down at home waiting for NYC, I engage them in white knight consulting for them to have a practical feel. We train them on the use of this accounting software, and at the same time, we also pay them. So just last week, I employed 3 of them, one of them on 4.2, the other one almost first class. But when I ask them a simple question, that do you have experience about Excel? They say they are just hearing no experience at all, not even theoretical base. But that one is even a very simple one. I don't want our case also to be like one of my colleagues when I was working with UBA Area 3, Abuja, Gariki. UBA there, 1999, 2000. That was what brought me to Abuja. And we have this graduate of computer science in my unit, internal control unit. This particular morning, the head of the unit called her, come and boot the system. We have some work to do. She started smiling. So we thought it was a normal smile because she can laugh a lot. The head of the unit called her again, as if she did not say, come and boot the system. Do you know what this lady, a graduate of computer science, she now smiles and said, we were not taught in school. Somebody spent 4 years in school, BSc computer science, and cannot boot the system. So because of this, foundation is very, very important. I will, in another 10 minutes, I'm going to share with us again some basic things we need to know about spreadsheet or about Excel. Then straight we go and begin all through. The remaining time we have is just practical. We have about 6 case studies, and God helping us within the time remaining before the first session is over, we are going to touch all these 6 case studies. And the one we cannot conclude, that's where when you give a man a fish, he will eat one meal. But when you teach him or show him how to fish, he will eat throughout his life. So wherever I stop, you will go and continue. It's not enough for you to just sit down. It's easy, it's easy. It's not easy not just to key in this. Until you consciously acquire knowledge, then you are not there. So I'm not going to solve all. I will do some part. I will leave you to go and do the remaining. So electronic spreadsheet application, I'm not going to waste time here. As you can see on the screen, a spreadsheet, an interactive computer application for organization, analysis, and storage of data in tabular form. And you can see it. You can see the tabular form. It can also be defined as a paper ledger or table used for mathematical calculation and for recording business transaction. That's Excel. See, besides performing basic arithmetic and mathematical functions, electronic spreadsheet provide built-in functions for common financial, statistical, and accounting operations. It's not always when you are using Excel that you have to key in formula. There are some inbuilt functions. I'm going to show some of them today that you want to sum together. One of the way you can sum together 2 cells or more cells, you can use the formula equal to sum, open bracket, click on the first cell you want to sum, colon, then go and click on the second one, then close it. But there are still other ways you can do it by using the inbuilt function, sigma, summation. There are a lot of functions in there. An electronic spreadsheet allows the user to perform numerical calculations. With Excel, you can add, you can subtract, you can divide, you can multiply on rows and columns of numbers. You can recalculate results easily. A cell, see what we mean there? As I'm saying it, you are saying it. A cell is a box at the intersection of a row and a column. See cell here. This one here is cell B2. If you look at it from your screen, where you have B, is defined as what? Cell B. See what I click? Those area highlighted is B inside the cell, but the description of that cell is B2. A cell is identified by the column and label and the row label. See it here? This is the column. These are the rows. Key terms to know. Rows, horizontal information, I just show us row, horizontal. Column, vertical information, label A, B, C. Then there are 16,384 columns, 1,048,576 rows for a total of 17,179,869,184 cells. Can you see the power and potential of the Excel? Cell address, the coordinates of the intersecting column and row, like I showed us earlier, see it here, B2. That's the cell address where the two intersect together. Now see the pictorial depiction of the Excel sheet here. You want to know what and what name they call each of these menu you see in Excel: office button, quick access tool, title bar, top level tabs, ribbon. You have this slide so you can go through all this. It's practical. I'm really aiming at now. Then we have the users of electronic spreadsheet. And we say the first category of user from my slide are we, the accountants. And we use it among other things for what? Cash flow analysis, budget, inventory management, financial planning, and so on. Business analysts also use it. Scientists use it. That's why I say Excel is for everybody. Academic institutions use it. Individuals use it. I remember when I was the exam officer at my university, of course, so we use Excel to compute the results, CGP, GPA, then CGP for our students. Advantages of an electronic spreadsheet. You can enter data quickly and accurately. Immediate calculations and recalculation. You can perform what-if analysis. You can change the appearance, format, and layout. Create nice graphs. Nice graph allows you to manage information. share information with other people, import and exporting of data to different formats, create huge tables with multiple pages, rows, and columns per spreadsheet. Now, spreadsheet application is the next thing. We are seeing spreadsheet application in financial accounting and reporting. Here we can say the various areas you can use spreadsheet include in doing cash book, departmental vote book, journals, account reconciliation, bank reconciliations, accounts payable, account receivable, schedules for prepayment, schedules for accruals, aging reports, depreciation calculation, designing and developing payrolls, using worksheet sorting data, asset management report, trial balance, income statement, balance sheet, otherwise called what? Statement of financial position, then annual reports, schedules for audit, financial analysis. These are some specific areas you can use Excel. Then when we call to spreadsheet application in financial management, see the various areas, investment appraiser, loan amortization schedule, cash budget, capital budgeting analysis, rating calculation, lease buyout valuation, that's LBO now, synergy, valuation models, risk premium, time value, lease or buy a car, MPV and IRR is part of the practical. I'm going to show us this morning, by God's grace, how to use Excel to calculate net present value. Was part of the practical we are going to see. We are used to the paper and biro one that they give you a question. For example, they say Adebayo is to invest 50 million naira on a project with the following cash flow profile. They say year one, 500,000. Year two, 15 million naira. Year three, 7 million naira. Year four to year 10, tell you 18 million naira. And they are now saying year 11 to infinity, 100,000 naira. And the cost of capital is 15%. You now see the project worthwhile. I know if we have that kind of question, biro and paper, we are used to quick. You say year, cash flow, discount factor at 15%, and so on. But with Excel, you can still do the same thing and get your result almost immediately. We are going to see that as part of the case study we're going to see today. So with Excel, we are talking of financial management, break-even analysis, and the rest. Now we go into the practical question. So you bring out your workbook. If you have it. We take the very first case study. I've told us wherever we stop, you will continue therefrom. Now, I'm going to share with us also on the screen first the case studies certification course. All right. Workbook. Please check the screen. Check the screen. I want to be sure you all have this. The soft copy has been shared. This is what I'm talking about now. Certification course in digital accounting. It now notes and case studies. Notes and case study module 1. That's what we are doing now. Spreadsheet application. As a matter of fact, some of the things I've shared on those slides, they are already in these notes. See them? They are in the notes. Just make out time to go through them. See case 1. The very first case we have this morning. Preparation of financial statement and analysis. Let me read from the screen if you have not printed it in hard copy. Your client, ABC Limited, inform you of the financial crisis the organization has been experiencing for 3 years, 2017, 2018, and 2019. Despite making profit for these years, the company has been unable to meet matured obligations. The executive director is getting frustrated and has concluded that financial statements are misleading and does not truly help in accurate decision making. The company is not doing well both in terms of profits and liquidity. 2018 performance is better than 2017 and 2019, but we can't still meet obligations. He presents to you the following extract and need advice. It requires a response within 1 hour for presentation at management meeting. Now, if you scroll, see the data. They just extracted data and give to you. And here is the data on your screen. Balances extracted from books. See all those stuff for 3 years. And the question is, how will you go about this task as a professional accountant and financial analyst? All right. And you are even told that the price, the fee for this assignment is 2 million naira only. I say jokingly, I tell people that when you give me tax like this, when the tax has to do, and you're gonna reward me, not only the five senses will be at work, I activate even the sixth sense. You know, we have the sixth sense. Those of us who have it, that's the Holy Ghost sense. Yeah, you have to be sensitive spiritually. When you give me task like this, I know it's going to benefit me and it's going to add value to humanity. All the six senses. In fact, that's the most important one. That first one, as the Holy Spirit. Speak. How do we go about it without wasting time? Because we have about 6 case studies to look at. When you are confronted with this, the first thing that will come to my mind, if I'm analyzing this question, they say they need a response within 1 hour. 1 hour. Let me take you from there. It means this solution is time bound within 1 hour. And that is the relevance of what we are doing today. If I'm going to solve this problem after identifying what and what is required of me, if I'm going to do it manually, how on earth will I meet up with the timeline, the deadline? But before we go into talking about the timeline or that it is time bound, let's first see. Somebody said to you, we have made profit for 3 years and we cannot meet matured obligation. What will come to your mind first as an accountant? Ladies and gentlemen, accounting profits are paper profits. Sometime. Well, I will explain what I mean by paper profits. You can see that an organization is actually reporting profit, but that is not a guarantee that they have money in their accounts. Liquidity is different from profitability. There is also the tendency, I'm giving us some of the reasons why you will see an organization can even declare an after-tax profit of 50 billion naira, and yet the same organization is struggling to pay a debt of 5 million naira. What and normally, we check your report, we are seeing profit after tax 50 billion, yet you cannot meet an obligation of 5 million naira. Things are not normal. And somebody have asked the question, why are we going to have profit reported and yet the same organization is not only unable to meet matured obligation, but sometimes you even see that they liquidate the affairs of the organization. And I now said humorously again, you know, accountant practice what is called what? Window dressing. In an open interview, they asked 3 accountants an open question. The first accountant, they asked him, what is 2 plus 2? That was too simple to be a question. Without wasting time, that guy said 4. They asked the second accountant the same question, what is 2 plus 2? The guy said 4. Then getting to the third accountant, they still ask him the same question, what is 2 plus 2 when it comes to accounting now? And that third guy, that third accountant just reasoned within himself. If these other 2 guys have gotten the answers correctly, why are they asking me the same question? And you know what this accountant asked the interviewer about? He says, sir, what do you want the answer to be? And he asked that question because he worked with this consciousness that accountant practice what we call window dressing, cosmetic accounting, makeup accounting, income smoothing, any different name. That is, from the data given, accountant can prepare minimum 3 different financial statements to address 3 different scenarios. When it is time to pay tax, accountant know how to fine-tune the financial statement so that they will avoid some taxes. When it is time to attract people to come and invest, they know how to fine-tune it. And when it is time to collect loan, they know how to fine-tune the financial statement. Anyway, summary in this case one, they have talked about making profit for 3 years. But check the data extracted. Did you see anywhere here in this data where they have actually informed us that this is the profit made for year one, this is the profit for year two, this is the profit for year three? We don't have it. By implication, you have to prepare those statements that report profitability to be sure that their claim of making profits for 3 years is even correct. So for this question, we are going to prepare income statement for 3 years. Another claim from this problem or from this case study is that we made profit for 3 years, but we cannot meet obligations. The next thing that will come to my mind, what are the reports accountant prepare that shows our commitment to outsiders, our obligations, whether they are short-term creditors or long-term creditors? And the answer is statement of financial position. By implication again, we have to prepare the statement of financial position, otherwise called balance sheet, for 3 years. Now, another problem is that we have made profit, but we cannot meet matured obligations. Where are the cash? Ladies and gentlemen, in accounting, the statement that explains the difference between liquidity and profitability is the cash flow statement. So it means for these 3 years, we are going to prepare the cash flow statement. Then what do we do again? How do we know a company that will fail and the one that will succeed? Just like a prophet that will prophesy. Through the instrumentality of ratios, analysis, and interpretation of financial statement, a professional accountant can tell you, from this record I have for me, your company have not done well in 3 years. That is descriptive analytics. Then prescriptive analytics, you can now say, if care is not taken, this is the problem that will come. So from this same question also, this problem, we are expected to calculate relevant ratios to address liquidity. In fact, it's when we calculate all those ratios that we now know why they were unable to meet mature obligation. And ladies and gentlemen, all this is expected to be done within what? 1 hour. Within 1 hour. So here we go now. How do we go about this? Check the template share with us without wasting time. We have designed a template and it's something I've done before. You give me 1 hour for this and you tell me 2 million. I've used that template and I time myself. Less than 30 minutes, I was able to finish, solve the problem because there is a template, there is a tool in my hand I can use to address this problem. We have several hundreds of such templates. Some we design, some you can access it later. But let's go and take care of this. So go and open that template given to you. Check, we call you financial. I will share it on the screen. It's part of what we have shared before now. And we are not going to waste time. See it here. See my screen. That number one, case study number one. Please just give me 1 minute.
Welcome back, sir.
Thank you very much. We are welcome back. So we have the templates. I want to be sure all of us with laptops there, we have pulled out these templates on our various systems. Now I have the question. Just check that workbook again. For those of you who have printed, we have it. All you are going to do here, just watch. It's very simple. This is one of such questions I said, wherever I stop, you will continue. Or we can meet up to take care of other case studies. Analyst name, see what you do there. You can type your own name there. Peter Drucker, one of the fathers of modern scientific management, say if the tool you have is an hammer, you see every problem as a nail. So I've put my own name. You can put yours. Paul. Then just watch. Number 2, name of company. Check the question. ABC Limited. Enter. First calendar year of data. Watch something. If you look at this income statement, see my cursor. The place is blinking. We had 0 there. We had 0. But watch. First calendar year of data. From the question, I have the question here, the hard copy, is 2017. So as soon as I type 2017, press enter, watch. Did you notice the 0 have changed to the first calendar year? Then number of years of data. Number of years. From this question, how many years? 3 years. Watch now. Before now, we have 2017, not applicable. You cannot see anything in these various cells, but they contain formula. Don't type anything there. As a matter of fact, any area you see mark black, don't type anything there. They contain formulas. Where you are permitted to type is where we have blue, where the cells are marked in blue. Number of years of data is 3 years. Watch. Enter. Excuse me. 3. The moment I put 3 there, see what we had? 2017, 2018, 2019. Assuming I decide to put 5. Watch. Can you see that? 2017, 18, 19, 20, 21. And yet, in financial modeling, we can remove this template to even cover for 10 years. So that those in tax offices, tax authority, that are permitted to carry out back duty investigation, they can use it to investigate and do their finding for the past 10 years. So let's go back to 3. All I will be doing now, watch, is just to key in the data. And the way I've arranged the question and also the template in such a way that I don't need to struggle. Exactly the way the data has been given, that's how the template has been designed. Sales revenue, see it here. I will just type 4,500,000. I can go horizontally. Then the next one is 5 million. As you are saying it, you are hearing be punching. Use your fingers also to see we are on the same page. Cost of goods sold, 1,300,000. For 2018 is 1,500,000. For 2019 is 2,200,000. Can you see automatically this template has calculated the gross profits? You already have gross profit because there are formulas there. Then we now say less what? Operating expenses. And from our question, the first year operating expenses 30,000. The next year is 21,000. The following year is 30,500. See, general admin expenses is 45,000. What? Followed by 32,000. Followed by 42,000. Next, lease expenses. The first year is 25,000. Followed by 12,000. Followed by 22,000. Can you see that? Depreciation expenses 45,600. Followed by 30,000. Followed by 20,000. And automatic, can you see our total operating expenses generated, those area marked black that contain formula? Now, operating profit, we also have them calculated already. Then interest expenses, that is interest expenses. We have 12,000 for year one. We have 13,000 for year two, and we have 23,000 for year three. Can you see net profit before tax automatically generated? My own is just to key in the data. Now, taxes, we have 26,000. Then we have 48,000. Then we have 18,000. Can you see that? Net profit after tax. We already have that. Then preference dividend in our question is given as preference stock dividend. We have 56,000. We have 10,000. And we have 15,000. Can you see retained earnings? Already we are done with income statement for 3 years. Under how many minutes? Told us with template, with the right tools in your hand, you don't need 1 hour to do this. That's what differentiates you, or that what differentiates an efficient accountant and an effective accountant. The effective professional, we say, give me 2 plus 2, I'll get 4. That is, give me the normal hours to do my schedule. Somebody who is efficient say, I need less hours to get the same result. Or if I'm going to spend that normal hour, my output will be more than the usual one. Cash, well, already in statement of financial position. So let me key this one, another 5 minutes, we should be done. Cash for first year, see it, 500,000. For the following year is 300,000. For the following year is 200,000. I can see hands up. You can unmute if you have a question. Quickly ask your question. Ogbuagu Techno BG6. All right. Cash. Then marketable securities, 49,000. Let me finish the posting, except your question is germane to what we are doing. Maybe you are not getting the same result. Then account receivable, 49,000, 18,000, 88,000. Okay, go ahead.
So your screen is static. We can't see what you're doing.
My screen is static.
Yes, sir. We can't see what you're doing. If you go to the chat, you see that lots of people can see
Maybe
what
from
you're
your
doing.
end. Are you sure we are
I
not
think it's a
getting
general
some?
problem.
I don't think it's general. Another person confirm. Can we see now?
Yes, now we can see it. Yes, sir. Now we can see it.
You can see the screen.
Yes, sir.
All I've been doing is just to key in the data, Is that okay now? Can you see marketable securities I've keyed in? Okay, let me go up now. I started with the income statement. All you just do, key in those data as you have it in the question. The only thing I say you should not tamper with, all areas you see in black, they contain formulas. Don't type anything there. Any attempt to type anything in the areas marked, in the cells marked black, mean you are deleting the formulas there. So just take time. It's a good one. Some of you who are not seeing it, after this training, you go and sit down and key it in yourself. If you now have challenge, you can reach out to me. So that you say, come and let us reason together. Account receivable now, 23,000 for year one, 17,000 for year two, then 27,000 for year three. See that now? Inventories, 25,000 for year one, 21,000 for year two, and 41,000 for year three. Can you see automatic? We already have our total current asset. Remember, your statement of financial position or accounting equation, asset must be equal to capital plus liabilities, otherwise known as ownership must be equal to ownership. So we've seen the total current asset. Then let's go to non-current asset now. Land and buildings. The first one is 3,387,667 for year one. 3,956,410 for year two. Then 5,956,410 for year three. Machinery and equipment, 450,000 for year one, 350,000 for year two, then 450,000 for year three. See something. Furniture and fixtures, 54,900 for year one, 52,000 for year two, 82,000 for year three. Vehicles, 23,400 for year one, 21,000 for year two. We are almost there. 22,000 for year three. Others, finance lease, 12,000 for year one, 10,000 for year two, and 14,000 for year three. Watch. Accumulated depreciation, 45,600 for year one, 75,600 for year two, then 6,500 for year three. See something, we have our net non-current assets. The other assets, 23,560 for year one, 19,000 for year two, then 38,000 for year three. Total assets. Asset must be equal to what? Capital plus liabilities. Then current liabilities, we have the first one, accounts payable, 1,101,189,000. Then 900,000 for year two. Then 400,000 for year three. What? Notes payable, 12,300. 12,000, 15,000, accruals, 34,566, 23,460, 12,660. Taxes payable, 26,000, 48,000, and 50,000. Other current liabilities, 32,222. We have 31,200. We have 31,800. Long-term debts, 23,000, 19,800, 29,200. And the final part, the capital side now. Preferred stock, 100,000, 100,000, and 100,000. Ordinary shares, that's the common stock from our question, 200,000, 200,000, and 200,000. Share premium. Well, that share premium is the same thing I will describe in that question. Paid in capital in excess of par when you issue shares above the par value. That's the share premium. So if you didn't see share premium and you see paid in capital in excess of par, you know it's share premium. First year is 12,450, 11,350. Then we have 22,430. Watch now. See retained earnings automatically. Okay, we have retained earnings. Watch what we have done. How do you get your retained earnings? If you check from your statement of comprehensive income or income statement, see retained earnings. We have linked this cell to the statement of financial position. Huh? If you want me to, I did not type retained earnings with my own hand. Automatically, the statement of financial position pick the figure for retained earnings from the income statement because I've linked it. But it's very straightforward. If you want me to do that again, let's see. How do we do this? Equal to the retained earnings. I will now go here. Equal to, I will go to the see retained earnings. I'll push enter. So automatic, it will come. The retained earnings for the second year, which is 2018, you have to pick it from the income statement. I will say equal to, I will scroll up to 2018, then press enter. It has picked that one also. Then retained earnings for 2019, I will say equal to again, or you can use one equal to and just drag instead of doing it one after the other. There are many ways to handle this thing. Then enter. Ladies and gentlemen, we are done. We are done with this. Do you know we have not only used this template to prepare income statement and balance sheet or otherwise called statement of financial position. Just keying in this data alone has revealed a lot of things. Then this is where you now begin to make your submission as a financial analyst or a professional accountant to your commissioner. Number one, I will look at this reconciliation. I've told us, or it's just a reminder, that accounting equation is say asset must be equal to capital plus liability. So this area, we say reconciliation of total asset and total liability and shareholders' equity. If assets are equal to capital and liability, this place mark red is supposed to be zero, nil. But there is a variance. It means for year one, their asset did not agree with liabilities. There's a difference of 22,760. Year two, difference of 10,000. Year three, 2,000,000, 329,320. This is where you'll be taking your notes. It's either some data are faulty or false are not correct or data are not given complete. Anything must have been the reason for this. Take your note. As a result of just keying in all this data, watch what has happened. This template in your hand has calculated for us over 20 ratios. You are not the one who now be calculating yourself again. I tell people, or I tell students, or those who attend our training program, that if it is in examination condition, you cannot tell your examiner you want to use this template. That is when you are going to memorize all the formulas. You talk of profitability ratios, you talk of liquidity ratios, you talk of solvency ratios, you talk of activity ratios, you talk of market or shareholders ratios. All of them over 20. But we say the essence of this training is to prepare us for the industry. So you are in your office, they have given you a work, you have a schedule to handle, and you have a timeline. You are time bound. This is not the time to be remembering one formula. Just use the relevant tool to address the challenge you want to solve or the problem you want to solve. Can you see by just keying in the data, this template has pre-calculated for us? See, current ratio for the 3 years, automatic. Quick ratio for the 3 years. See, inventory turnover, average collection period, fixed asset turnover, so total asset turnover, debt ratio, debt to equity times interest, and let me continue to scroll. Debt ratio, debt to equity times interest, and gross profit margin, net operating profit margin, net profit margin. See them? Return on total asset, return on equity. Tell me if you are solving this manually, how can you finish this thing in 1 hour? That is why we need the relevant tools to be able to fit into the digital world. We did not only stop here. It's for another time, maybe a future training. Earnings per share, price earnings ratio, we are not calculated because the data required for them we are not given. Now, let's go see other ratios here. Net profit over average to sales, sales to total asset, return on asset, net profit, asset total over total asset of shareholders' equity, return on equity. This template I've calculated. It has not stopped here. Do you know this template also have helped us prepare our cash flow statement, indirect method? And these are part of the things you will now ask your commissioner. I need information. I need the data for 2016. Because when you are using the indirect method of preparing cash flow, you need the previous year to be able to prepare the cash flow for the current year. So here you will request they should give you the data for 2016. Once you have this, adjust, you'll be able to calculate that. See cash flow, everything has been done here. But let's go and address the problem now. I'm going to stop this so we can do other question. Current ratio is given by the formula what? Current assets all over what? Current liability to 1. And the industry standard is what? 2 to 1. 2 to 1 mean for every 1 naira you owe by way of current liabilities, you are expected to have minimum of 2 naira worth of current assets to pay your debt. But see the case of this company. Are you surprised that they now have problem that they can't meet their matured obligation? Their current ratio is 49 kobo as against the 2 naira recommended. So take your notes. You are reporting that the industry standard for current ratio is 2 to 1. That is, for every 1 naira the company owe by way of current liability, they are expected to have 2 naira worth of current asset. But from the data given to you that you have worked on, current ratio for both 3 years, less than 1 naira. So they cannot meet obligation. Now, quick ratio is given by the formula what? Current asset minus inventory all over current liabilities for 1. And the industry standard is what? 1 to 1. 1 to 1 means for every 1 naira an organization owe by way of current liabilities, they are expected to have 1 naira worth of cash and near cash items to meet up the obligation. Or put in another way, you don't know when someone will come and buy your inventory. That's why they remove inventory from that numerator. Current asset minus inventory. So we are talking of cash and near cash item now. And the industry standard say what? 1 to 1. But check the result for the 3 years. 47 kobo is less than 1 naira. 33 kobo less than 1 naira 62. So they have not passed the industry standard test. They've not passed it. On and on, you'll be picking all this ratio and be analyzing. Okay, come and see something also. Average collection period. When we talk of average collection period now, we are talking of the length of time you give to your debtors to settle their indebtedness or their debts. Can you see this one? And that one, when we calculate it sometime in year, in month, and in weeks. It depends on what you use when you are using your formula. Now check the average collection period, 1.84. If you convert this to year, it means this same company have given their debtors over 1 year, in fact, close to 2 years to settle their debt. If you convert this one also to year, it means year 2 also, the debtor given more than a year to settle their debt, the same thing. So if in accounting, we have said sales are sales, whether cash or credit, and a company is reporting a turnover of 50 billion. And out of this 50 billion, 45 billions are credit sales. And you are now telling your customer, I give you 2 years or 1.5 years to pay your debt. Where will you have the cash to meet your matured obligation? Let's leave this question here. You can continue the analysis. See the gross profit if you want to comment on that. So it depends on what the commissioner wants you to do. We stop here for this. I'm saving this in case some of you don't have it. Let's go straight to question 2. Case study 2. From our question now. Case study 2, statement of financial position. Use the following balances. Please check your workbook there. It's there. History 2, statement of financial position. Use the following balances extracted from the books of Walmart LLC to prepare a statement of financial position according to the provisions of IFRS using Microsoft Excel for the period ended 31st December 2021. Can you see that? Inventory, we are given the figure. I'm not sure some of us will have it's part of the material given to us. Workbook. I just want to show us that. See the workbook here. That's case 2. See it here. We have questions. Use the following balances. We are asked to prepare the statement of financial position in according to the provisions of IFRS using Microsoft Excel for the period. These are all the figures. So go and launch your Excel sheet now. Go and open your Excel sheet. I will open mine and show us. So once you launch your to save time, what I've just done. So you will do the same. You just type Walmart LLC statement of financial position for the period ended at 1st December 2021. You can just type under exam condition. When it comes to the time where our student in the college will be doing computer-based tests, maybe after writing all the paper-based, one of your exam, we will ask you to use your system. When we come to that, if you have a question of this nature, they ask you to use Excel to prepare statement of financial position. It's not the time to be doing that you want to beautify. No, it's not the beautification of the Excel that matters. It's just what you are able to key in because of time. So after typing the name of the company statement, you title it, see the provision of IFRS. IFRS say you should arrange your asset in order of durability. But IPSAS accrual is saying you should arrange your asset in order of liquidity. That's why in IPSAS accrual, they start with cash and cash item, cash and cash equivalent. But here we are starting with non-current asset. So once you open your Excel sheet, what you do, non-current assets, you just type it out based on what we have in the question given to us. Then total current asset, total asset, non-current liabilities, loans and debentures, total non-current liabilities, the bank overdrafts, and trade payables. They are the 2 items under current liabilities. But what I want to type in this thing is not a problem to us. Let's just quickly see how we are going to balance this statement of financial position. That's if the data is correct. The total assets should agree with the capital and liabilities. So PPE from our question, if you have printed out hard copy of this workbook, the same thing we advise you in your exam when you are given a question and you are asked to prepare financial statement according to the provisions of IFRS or IPSAS accrual. Students, what you do, each item, when you are giving especially trial balance, what I normally do those days, I make sure all the items in my trial balance, I will tick them. As you post one, you tick so that you leave anyone on touch. At the end of the day, if you post to the correct location or position, what you are supposed to debit, you have debited, your account is supposed to agree. That's if the question itself is also okay. So here, the first one is PPE. I will tick it on my paper, 20 million. I will now type here 20 million. 20 million. Enter. The next one, according to provisions of IPSAS, after your PPE, intangible assets. Intangible asset is 10 million, type 10 million. The next one is, I will tick it on my paper, investment property, 5 million. I will type 5 million, enter. Can you see this now? Total non-current asset. From this question, we have only 3 non-current items that make our asset. So how do I do? This is where you begin to use the inbuilt functions. Now, let me just use the most simplest one in Excel. If I want to sum together all these 3 items, all I will just do, I light, and I want my answer to be here. See what we're going to do. Auto sum. Can we see auto sum? Once I click this, automatic, it has summed together all the 3 items. And if you want to do the long way, all I will do, I will say equal to sum. I will say open bracket. I will click on this, colon. Then I will click on the last item. I close the bracket, enter. It's still the same thing, 35 million. The next item, current assets. Can we see current assets? So how many items do we have under current asset? Inventory. See inventory from our question is 3 million. Prepayments from our question is 2 million. I will tick all those ones. Then total current asset. Somebody else will just say 5 million. No, you are not a system accountant. You just type that 3 million plus 2 million is easy now. And I say in the exam condition, when they want to mark you, if a question asks you to use Excel and you just decide to say 3 plus 2 is 5, you type it. The examiner can position his cursor here. I will know you don't have formula. So you have not done anything. So just come here also, highlight and use what? Auto sum. That's 5 million. What is total asset? Total asset here is total non-current plus total current. And how do we add it together? I will say equal to what? I will take this item, 35 million. You know what I just did? Let me take that again. Because in Excel, that's what you need. Anything you want to do here, you start with equal to. I will now click on total non-current assets. Press your shift key and press plus. I will now come and click the total current assets. Then enter. Can you see now? Our total asset is 40 million. 35 plus 5 million. Represented by what? Of financed by non-current liabilities from our question. What is loans? Loans from this question is 8 million. I've ticked that one. 8 million. Enter. Debentures. 7 million. I tick it on the paper. Enter. Then total non-current liabilities will be what? We'll sum it together. Go to auto sum. See it here. That's 15 million. Then we come to current liabilities. Current liabilities. For current liabilities, I have bank overdraft, 3 million. Enter. Then trade payables, 2 million. Enter. Again, what is our total current liabilities? Use auto sum. No, it's 5 million. Then what is our total liabilities? We have the total non-current to be 15 million. We have the total current 5 million. Total liability we say equal to the way we did for asset. Press this, shift key plus this, enter. So total liability 20 million. Finally, what is our share capital? We are going to equity now. From this question, our share capital is 15 million. I will type 15 million. Then our share premium is 5 million. See that? Then what is total equity? Shareholders' equity is defined as what? Ordinary shares plus reserves. So I had the two together again, sum. That is 20 million. Now, total liabilities and equity. See again accounting equation. What is accounting equation? Asset must be equal to what? Capital plus liabilities, or liabilities plus capital, whichever. Now, I will come here now, total liabilities, I will say equal to, what is our total liabilities? 20 million. Then what is our shareholders' equity? Shift plus equity, match. Can we see this now, that our total asset of 40 million is the same thing as our liabilities and equity? That means the statement of financial position agree, balance. I will skip case 3. I want us to go and practice that one ourselves. It's your own practice question. Statement of comprehensive income. But if we go through this case study, see it. The following data was extracted from the books of Abuja PLC for the year ended 31st December 2018. Revenue, expenses, income tax expense, loss for the year from discontinued operations, other comprehensive income is given there. Yeah, then we now say required. Use Excel to prepare the statement of comprehensive income for the year ended 31st December 2018 using single approach basis. Ladies and gentlemen, is to remind you also, this may be relevant for your exam. I'm very sure that when they taught you IFRS, they must have told you that in preparing the statement of comprehensive income, we have two approaches. We have the single statement approach and we have the two statement approach. So the approach we are looking at in this question that I asked you to go and solve using Excel, not paper and biro, is the single statement approach. And in the single statement approach, it means you are merging together both activities that are the primary objective of the business and the one that are exogenous, that are not the main business of the organization. For example, a business is into buying and selling of handsets. So every revenue realized from the sales of asset and every expenses incidental to either the purchase of the asset or the manufacture of this asset will go into the first part of the statement of comprehensive income. Now, if you now look at this question, they now say other comprehensive income, like exchange difference. The business of the company is not to go into exchange. Their primary business is to sell assets. So any other income or loss they now incur as a result of their involvement in activities that are not primary to their business, they are classified as other comprehensive. So under the single statement approach, when you now merge all together, both the profit they've made from the normal business and the one they made from exchange, from revaluation, you merge them together and you come with total comprehensive income for the year. That is the single statement approach. But if you want to use the two statement approach, what you will do, you will first do one first part, income statement. You will separate it into two. The first part will report the profit made from the sale of this asset. And that's why when you look at the two statement approach, it will end with profit for the period. As soon as you get to the profit for the period, it means I have reported all the profit or loss we have made as a result of selling our primary objects, that is asset. Immediately, they will now start the second statement of comprehensive income. The profit from the normal business will be the first one. Then you will now begin to add all other comprehensive income. That is the two statement approach. At the end of the day, Whether you use the single statement approach or the two statement approach, you will still arrive at the same total comprehensive income for the year. Or whether sale of asset or exchange rates, gain or loss, everything still belongs to the company. That's just the summary. Let's go now to case 4. I've asked you to go and do that. And to make things easy, the same way I've lined up this case study in case 3, that's the same way you type them out in your when you are solving it in Excel. The only thing you just introduce when you come to, of course, when you say revenue, expenses, income tax, the area you find the difference between them. Let's leave that. Case 4. How do we use Excel to calculate net present value? Net present value. So that is what case 4 is addressing. So I will stop sharing. Again, I'll go and I'll pull out for those of us who don't have this. See it now, see case 4. I've asked us to go and case 3, see it here. You go and use Excel to solve that. That's your assignment. Take away practice. See case 4. Mr. Vincent invested 5 million naira on paper manufacturing business with the cost of capital of 10%. The project is to last for 5 years with the following cash flows: 1.2 million, 900,000, 870,000, 650,000 naira, and 800,000 naira respectively. Required. Using spreadsheets, determine the viability of the project. See, once you hear in your exam question or in real life, is project viable or is project worthwhile? Or some question will not tell you direct to do MPV. But once you look at the question and they give you cost of capital, they give you inflow, they give you outflow, what they want you to do is to calculate NPV, net present value. So that's what we're going to see now in this next case study. So go and launch your Excel sheet again. If you have launched it, I will open mine. Let me show you what to do. See my Excel sheet now to solve this problem. So if you open your book or the same one you have opened earlier, you can just rename it. You don't have to go and open a fresh sheet or a fresh book, workbook. Sheet 1 can be, see, sheet 1 is the financial report I've done. Sheet 2, I'm using it for, you can add sheet 3 on, and you can rename them. Let me delete this one. To delete, this is not the time to teach basics of Excel. And how to rename, all you just need to do when you click on this, you right click, then you type on rename, then you give it financial reports. Then this other one, I click on sheet 2, I can rename it. How do I rename? Click on sheet 2, right click, then rename. I'll call it MPV. That's all. Can do that. Now let's look up year 1. Go and type this. Year cash flow. Just type anywhere you like. Cash flow, discount factor. Can you see that? Discount factor, that's DF at 10%. Then present value. What is MPV? MPV is the difference between the present value of future outflow and inflow. Difference between, that's the present value, the difference between the present value of inflow and outflow. We all know that year 0, just go and label it like this. Go and type 0, 1, 2, 3, 4, 5 under year. Then cash flow, leave it blank. Then we have cash, this DF at 10%. If you want me to delete and type DF at shift 10%. See it, I've retyped that one now. Then PV. Now check from your question, what is the cash flow for year zero? Year zero is usually the year of investment, that capital outlay. And what do we have here? How much is Vincent investing? 5 million. See what I'm doing? I will do minus because outflow, money is going out. In normal one, if the one you do on paper or in your book, they will say put it in bracket. So this one, I say minus. I will now type how much is that? 5 million naira. Enter. If you use minus in your own, may put you give you in parentheses. Correct. If you have it minus like this, it's still correct. If I want it to be in parentheses, I have to go and format the cell, but we don't have the time for that now. Please look up. This is one of the most important area you and I need now in Excel. Just watch carefully. Now, according to the provision in financial management, well, we are talking of investment appraisal, I would say discount factor. We know that year zero is year of investment, and that discount factor is given by what formula? 1 over 1 plus R. Are we there? 1 over 1 plus R, that's the percent, raised to power N. That's the discounting factor. The 5 million naira I'm expecting tomorrow, or the 5 million naira I'm expecting in 5 years' time, what is the present value today? I need the discount factor. 1 divided by, see it here, 1 plus R, let me use more R here, R percent, close bracket. See it. 1 over 1 plus R, where R is the cost of capital, percent. Then you raise it to power N. You raise it to power N. Are we there? Shift N. Don't worry. We'll take it. But that's the formula. You raise it to power N. That's the formula. What is the discount factor? So I will come here, and you know that always, year zero is 1. You notice when you are doing MPV, year zero is 1. How do we come to this constancy of 1? Let's see it in Excel. Watch now what I'm going to do. I want to get the discount factor at 10% for year zero. I will say equal to, watch, 1 slash open bracket. Our cost of capital from this question is 10%, right? So 1 plus 0.1. That's 1.1. Correct. 1 plus 0.1 is 1.1. So I will say is equal to 1 slash 1.1. I will close this bracket. I will now press my shift key and look to from my own system where you have number 6. That's where I have raised to power. I will press the shift key and press 6. It has raised it to power now. And do you know the N that is supposed to, the original formula raised to power N? N is number of years. But for this particular is year what? Year zero. And in simple mathematics, they say anything raised to power 0 is what? 1. But we are not just assuming here. All I will do here, I will now say raised to power what I'm doing. I will go back to where I have my years. I will click on D5. I've clicked on year 0 and it's telling me year 0 is cell D5. I will now press enter. Watch. You see we have 1. We have 1. And in the formula bar, see it, is equal to 1 slash 1.1 close bracket raised to power D5. When we go to D5, the Excel, I've realized D5 is here 0. That's how we come to 1. ladies and gentlemen, the last thing you do here, or the next thing is, we now want to see the present value of the 5 million naira you are investing today. What is the present value today?
Okay, now it's like it has come now.
It's the same 5 million. So to get that,
Just
look
now
up what you will do. The present value will say equal to this 5 million. Press your shift key and press 8 from your system. Star. Star means times. I need star. In Excel, star means times. I will now multiply by this 1. Multiply. Do you know it's still giving me minus 5 million? The 5 million I'm investing today. What is the present value of that 5 million today? So my 5 million I'm investing today is still 5 million outflow. That's the meaning. Now, for us to go, you see the beauty of this Excel, and I don't have to be repeating formula. But watch first. For year 1, let's key in the cash flow. How much money are they expecting year 1? 1,200,000. Enter. Year 2 is 900,000. Enter. Year 3 is 870,000. Enter. Year 4 is 650,000. Enter. And the last year is 800,000. Enter. You see that? So I need the discount factors for year 1 to year 5. Huh? We need the discount factor. Again, if I still want, for benefit of doubt, if some of us want to see how we arrive at it, I can just drag this formula down. But let's take one more. If I say equal to discount factor, 1 slash open bracket 1.1 close bracket, then shift raised to power year 1. I click on year 1, which is cell D6. Enter. See what it give me? It means the discount factor. Some of you can use your calculator to confirm this figure there. It means the discount factor of year 1 at the cost of capital of 10% is 0.90909. But I may decide to work in 4 decimal places. See, just look up now. I want to reduce. This is like 5 decimal places. I will reduce it to 4 decimal places. It gives me 0.9091. I don't need to repeat the formula for the remaining years. See what I'm doing? I will just drag this thing down. It has given us the discount factors for the remaining years. Just drag it. That's the beauty of Excel. Now, even for this side, we now want to know the 1.2 million we are expecting in year 1. What is the present value today? The value usually reduced, of course, in terms of purchasing power. I will do 1 again, then drag. Is equal to, I will click this, multiply it, that's shift star, multiply by the discount factor. See the interpretation. The 1.2 million naira we are expecting in year 1, or that Mr. Vincent is expecting in year 1, the value of that money today, in order for me to know whether it is worthwhile to go into the venture, is 1,090,909. That's the concept of present value. All you need to do now, you drag this down, you get the remaining value. Now we have all the PVs. See, 800,000 we are expecting in year 5. The present value of it is 496,737. Particularly in our environment, there is not only hyper or galloping inflation, it's self-made inflation. We create inflation in my own country. You go to market in the morning, they tell you the price of an item is this. Go back later, especially when they know you need it, give you another price. I call that one self-made. Maybe economists have not factored that one in the theory of inflation. Self-made inflation. All right, we are done with this. All we need to do now is the NPV. What is the net present value? Present value, the NPV now will be the difference between the 5 million naira I'm investing today and the present value of all the cash inflow I'm expecting for the next 5 years. So if the positive, that's the inflow, is over and above the 5 million, then I will conclude that the project is worthwhile. But if otherwise, it is not worthwhile. And to do this is very simple in Excel. Highlight. Once you come here, I'm asking to sum together. Go again to your sigma summation. Can you see that now? What do we have? Minus, that's negative 1,570,950. Then you conclude the project is not worthwhile. The project is not viable. That is this question. Finally, case 6, loan amortization. Check your platform. There is another template we are going to use for this. We have a template for loan amortization. Ladies and gentlemen, remember again the goal of this certification course, or one of the goals of this certification course in digital accounting, is to prepare us for the industry, what is really obtainable. All this loan amortization. There is even another, but that one will take some time. There is even another schedule for loan amortization that you can sit down, use Excel to design yourself. We have that one. But we have ready-made templates for purpose of decision making that you're not going to waste any time. All right, let me stop sharing this as we take the last question for today. I will take the last session for this section, rather, this morning session, 3 p.m. We'll come back and we'll take cloud accounting and blockchain technology application. That's 3 to 5. Again, I'm going to share for those of us who don't have it's supposed to be case 5, not case 6. That's from your template. I think I get that one correct now. See what we even have practice questions there for some of you who want to practice later. See the loan amortization. An entity takes out a loan of $100,000 at 15.5% for 3 years. Required. Use the loan amortization template to answer the following questions. A, what is the amount of the quarterly payment? B, how much is the interest payable? C, prepare an amortization table. Mr. Bawa Danladi, ask your question. You can unmute and ask your question. All right. Let me pull out that one. Check now and see. Do you have this template? Please ask your question. Unmute. I'm seeing one hand up again. Unmute and ask your question. Unmute.
Please unmute yourself, please.
Okay, can you hear me now?
Very well.
Yes.
Okay. Good afternoon, sir. My name is Philemon Ababadun from the course 31, Nigerian College of Accountancy. So very quickly, my question is from the screen that you shared. I wanted to ask if it was possible to like define headings in Microsoft Excel. Like, I don't know if you can refer to the former solution that you were working on. You can see that like some of the headings were not really because of the rows and the columns of the spreadsheets, they were not really like defined or like empty. I don't know
Are
if
you
you
referring to case study, the MPV
case
calculation?
study one. Case study one.
Okay, case study one, financial analysis model. This one, right? Can you see this? Is it
I
this one? Case
I
study
can't
one is this. Check.
I can't see it. I
Financial
can't.
analysis model. Are you referring to this?
Yes, yes, sir.
Headings as in, it has a financial analysis model. See,
I'm referring to case study one, but I'm referring to the solution now, not
okay,
the
solution.
yes, one you shared on
Oh,
your
there's no
screen.
problem. See, that's the one of the flexibility with Excel. Like this one now, you I can put here income statement for the period ended December 31st, 2019. You will pick the last year. Of course, you can type the heading. You can type the heading here. It's flexible. Even where the template, because this template is as designed, even where the template did not give you room, maybe, okay, let me do something now. For instance, if I see what I'm doing, I decide to delete this entire row. It has not changed anything in my solution. So you can always insert row as the need arises in Excel. So it's flexible. I've answered your question. You can.
All right, thank you very much,
We
sir.
just use I also mentioned that there's what we call financial modeling. In financial modeling, time will not permit us to look at that because of these 2 days. It's a real work. In financial modeling, you will learn how to even design different templates that will suit as long as it's accounting problem. There are templates you can design to solve those problems. I have one here, for example, for bank reconciliation that or once you have your cash book in soft copy, and of course we have the template for bank reconciliation. Once you key the different automatic, it will reconcile your account for you. We are not looking at that for this. Maybe when we come to artificial intelligence, because also when we come to AI, we have AI tools that all you just need to do, just collect your bank statement soft copy, collect your cash book in soft copy, then import and attach and give the correct directive to ask the AI to help you reconcile. It will do the reconciliation. But then I tell people AI is not 100% perfect. One AI tool called ChatGPT will always tell you ChatGPT makes mistake. And this we have proven over and over. A lot of errors like that I've identified. I've even written the company in charge or those people in charge that these are things. So every day. Anyway, let's go back to where we are. I think the next question, are we solving? Now, this is the last one for the day. We have 7 minutes, our time. For this loan amortization schedule, I will tell us, we say we are getting ourselves equipped for the industry. Some of you who will go into practice, you need some of these too. We are in office some years back when one of our clients ran to our office looking beaten, battered, buffeted, molested. He ran. And what happened? He said, sir, I collected a loan from the bank. He told us the amount he collected and he started paying back. But after a while, I think he defaulted. And only for the bank to now tell him, it's just like somebody took a loan of 20 million. And after paying till like maybe a remaining outstanding balance of 5 million, you default in payment. And the next thing they now say your loan is now 15 million. You collected 20, you've paid like 10, remaining, you've paid like 15, remaining 5. They are now saying because you defaulted, it's now back to 15, something like that. You just say, calm down. Before even going to meet the bank or to write the bank, we sat down with one of these loan amortization templates. We've done our homework. We key in the values. How much is the loan? What is the duration? What is the rate, interest rate? And we generated our own amortization. So we had to write the bank that we dispute this amount given to our client. So they invited us. We sat down, banker. How did you arrive at your own calculation? We brought out one of the tools. We showed them one of the tools. They shook their head and said they were going to get back to us. At the end of the day, they have to review it. There are a lot of times our financial institution play on the ignorance of customers. As a matter of fact, there is another AI tool. When we come to, I'm not saying we have time to do all those things, but there's an AI tool that will even help you to calculate all this one over charge that banks, they will be just, because of course we have the policy, we know the rate they are supposed to charge per transaction or as the case may be. So all you just need to do, bring out your back statement, then import it in this particular AI, artificial intelligence, and it's going to calculate and pinpoint all the various areas you have been overcharged, and it will come out with summary, total amount you can claim. Let's leave that one until we come to artificial intelligence. That's if we are going to consider that today. That's tomorrow is artificial intelligence application, Saturday. Now go back to this last question, loan amortization. An entity takes out a loan of $100,000 at, so all I will do, just look up, pull out this particular one, template. Name of loan, I can put car. See what I typed there, car loan. I just decided to use car. You may use building, you may use any other thing, mortgage, or just use name. Lender. We don't have lender. I put access. Access is one of the bank we use. Watch. Loan. See the loan terms. Just be watching. The amount of loan taken, just type 100. Don't help the template to put dollars here. See naira here. That one is not a problem. Just leave it. Then loan date. Loan date. I will be the one to choose the date. The question did not give us. Let's say I collect the loan 1st January. This template is designed in the American style of writing date. So in the US, they use month first. So that is January 1/2025. Now, if you take a loan January 1st, 2025, right? Okay, let's hold on first. Annual rate is 15.5. Just type 15.5. What? First payment. Let's read from the question. You pay at the end of the month. Here is monthly, you pay your loan back. So end of the month will be, see what I'm doing here? First, that is that one there stand for January /31 is end of January, end of the month, 2025. Then what is the end date? If you take a loan on 1st of January 2025 and the loan is going to last for 3 years, accountants, somebody suggests what will be the last date to pay the loan. 12 month first, 31, that's end. Is it 2027 or 2028? Or 31, right? Nigerian College of Accountancy student. What will be the date? 3 years loan starting 1st January 2025. We end which year? Nobody is saying anything. It's 2027. Because 2025 from January to December is 1 year. 2026 is 2 years. Then by December 31, 2027 is 3 years. This is the beauty of some of these tools in the hand of accountants. That whereas somebody else will be struggling, not only even struggling, you want to do it manually. Okay, I collected this loan. This is the percentage. This is what I'm supposed to be paying monthly. This is what I'm supposed to be paying quarterly. Or sometimes they even give you their own loan amortization in the bank. You compare it with this. There are a lot of things. You want to do comparative analysis of the loan amortization schedule of the bank and the template. We have several ones. This is just one of the variants. Let's answer the question now. Say, what is the amount of the quarterly payment? Is there? See, no waste of time. Quarterly payment is first to pick the figure. Then, how much is the interest payable? Total interest over time. See the interest you are paying on 100,000. Huh? Now, again, I want to remind us that this loan amortization varies. So it varies. Because sometimes we will have the reducing balance method, sometimes we have the sinking fund method, even in loan, sometimes straight line method. Because there are some loan you will collect that they decide to say, okay, you have the principal payment, the same amount every month. The interest may vary. It's not like the one, I will share one experience here with others, we close. Like the one here in the US. In fact, when I reviewed that loan amortization recently, it's on mortgage. Here, even when you have your money in the US, even if you have your money, it's not wisdom for you to go and carry as much as $300,000. It's not cash now. Even in your bank, that you want to buy a building all at once, you want to pay. What they encourage you to do, you have the liquid resources required to pay at once. They expect you, encourage you to get credit card, because credit card also has its own advantages. With credit card, you begin to build your credit scores. So when you build your credit scores, of course, the information is available, particularly when you have your social security number. You will see finance houses, even without soliciting for financial assistance, calling you. They've seen your credit score. They'll be asking you that they want to give you loan, even without requesting. Anyway, don't let me divert. Now, when I review the mortgage for the present place we are staying, that's our property now. When I reviewed it recently, I realized that the kind of amortization they are using for mortgage, when you collect part of bank money to finance your property here in the US, it takes more money from you. It's not like this small one. It varies. And yet they will tell you it's just of course, the interest rate was 4 point something percent. But the way they have worked it is that a significant percentage of your monthly mortgage payment go into interest. For example, in my own facility, I pay 1,661 thereabout monthly as mortgage for the property. But out of this 1,600 and something dollars, not yearly or monthly, it's only $300 that go into my principal. 800 out of it is interest rate. And the balance, they call it escrow, some other incidental expenses like that. So it means every month, as soon as they debit my account, $1,661, my principal will reduce by only $300. 800 plus will go by way of interest. It's not the same thing with this loan amortization I've shared with you. That's why we'll have it. So what I concluded is that this thing is really another modern slavery. So you have your money, so we have now made arrangement, principal payment. We don't have to wait. And you are giving up to like 30 years, 35 years to make the payment. Why do you wait for 30 years and be paying interest rate of $800 every month until maturity when you can pay off? So that's just by way of explanation for us to know that this loan amortization differs. It depends on the policy of the person giving out the loan. We'll conclude the loan amortization is automatically here. See it as you scroll. Even from here now, you will see from day one, see the first date, January 31, 2025, payment. See the total payment there. Interest is this, principal. See what we are saying, similar to what I said is obtainable here. You paid a principal payment, 2,232. See the interest. As well as many people who have the means, loan is not a good one. Except that, of course, in financial management, it's good you use other people's money, particularly when you know the returns from the investment of that money you have borrowed will be over and above the interest you are going to pay. It's good you use people's money. So there are a lot of things here. Credit worthiness, don't let me share some information, very personal. My credit score here, I just laugh. I laugh when I saw the way banks, financial institutions solicited, sending me, of course, send me a letter to my address in the house. Or people open the letter. I think just last week I saw 3 letters from financial institution calling me, come and take loan. One $50,000, another one $50,000, another one $20,000. And the one that I laugh, I say, these people, the one I laugh when I open and saw, do you know one finance house offered me here in US to that you are credit worthy, you qualify, we've checked your record, and guess how much the loan they asked me to come out? $3,300,000 and something dollars. Maybe I've not seen a particular project I can invest that much money. Who knows? If God give me the idea, I can go for it as long as the same investment will pay back the principal and the interest. Ladies and gentlemen, it's really a nice time with you. Thank you for your attention. I think we stop here for now. We'll continue afternoon session. If you have any question, this is the time. And
Thank you
we are saying
very
here,
much.
thank you for your attention.
Thank you very
Right.
much, bro. Dear Professor Adebayo. We
Thank you,
appreciate you, sir.
Thank you, sir.
Yes, sir. So the floor is open to you now. If you have any question, can you just indicate by raising up your hand? Or use the menu icon. If your video is on, you can just raise up your hand. We'll also see you. Any question before we take a short break? What time are we resuming, sir?
3 p.m.
3 p.m. All right. Any question from
Thank you all. I'm seeing
anyone?
some comments here. So impactful. Thank you, Mr. Jaffe Gompil. Now go the Mocha. I don't know if you speak outside there. Huh? Yet we'll see more relevant topics and courses later when we meet. Very, very relevant to us.
All right, sir. Please rest well. We'll be back at 3 p.m. Thank you so much.
Thank you, sir. Bye.
Welcome, sir. And I also want to use this opportunity to also thank the audience, the participants of this workshop for paying more than the usual attention during the course of today's workshop. Please get yourself prepared. We'll also be joining the online workshop at 3 p.m. this afternoon. On behalf of the Director General, Nigerian College of Accountancy, Dr. Friday Yapan, the entire management team of the college, and also the White Knight Consulting, we wish you a happy break. See you again at 3 p.m. Thank you. Bye for now.
Thank you, sir. Bye.